Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for the 18th through the 22nd, 2020. We're going to go ahead and quickly start off covering some of the earnings that were covered this week that I was looking forward to, such as Walmart, Target, Lowe's, Home Depot. Then we're going to go ahead and jump into covering the four main indexes, take a look at their performance here for the week. Then we'll take a look at the total S&P 500 movement for the week, what stocks were strong, what stocks were weak, which sectors were strong, which sectors were weak. We'll go ahead and take a look at a heat map that kind of shows us all of this. Then we're going to go ahead and take a look at oil, the dollar, silver, gold, bonds, and then wrapping it up by taking a look at the current mortgage rates and if that has changed for the week, either up or down or just remain unchanged. So if you're interested in any of that, definitely stay tuned in today's video. Of course, if you are brand new to my channel, I cover the stock market, dividends, personal finance. If you're interested in any of those topics, hit the subscribe button. If you do enjoy this video, find it helpful, give this video a thumbs up. And if you have any comments or questions at all going over this video, the stock market, or any other area, go ahead and drop it into the comment section below, and let's go ahead and get started. Okay, so last week we can see here right off the bat, this is last week's change for the past week. So S&P was down 2.26, Dow Jones 2.65, NASDAQ down 1.17, and the Russell 2000 down a whopping 5.46%, whereas silver, gold, and bonds pretty much positive, with silver beating by 7.55%. Very nice. 10-year rate was at 0.64 for the bond rate. Mortgage rates were at roughly 3.56%. So I kind of asked the question, how are you all feeling about this market? Do you believe this upcoming week will be positive or negative? I would like to hear from you guys here watching this video today. Go ahead down below. Let me know, what are you thinking about this upcoming week? Do you think it will be positive? Do you think it will be negative? Do you think it will be flat until we get some more sort of news? I would really like to hear what you are thinking. And yeah, that's the past week. So kind of moving into what was posted this week. Now, we did have a few earnings coming up this week. So a few that I was interested in were IBM, Walmart, Home Depot, Target, Lowe's, NVIDIA, Palo Alto, Splunk, and Intuit. Now, these were all coming up this week. So I kind of posted this image here. This is from Earnings Whisper, great website for earnings. We'll go ahead and cover a few of the earnings that were released this week. Now, of these, a few that I was looking forward to was Walmart. Walmart was lower, I believe, on the week. I know it was down for the day here on Friday, but I believe on the week Walmart did start to kind of lose a little bit. I believe it was roughly down 1 to 2% this week, and that's just because Walmart's actually done fairly well during this whole downturn, and they've had a lot of customers going in and out, but they did slightly miss their earnings by just a very tiny bit here. They were expected at 119 per share. They came in at 118, so just a little bit off there, really not too bad. And they had revenue of 134.6 billion, whereas their consensus was 129. So really, all in all, they were only really off by just a slight tiny bit here. You can see they reported 118. They had expected 119, and this is showing a negative 0.8. I would say that's essentially basically a win-win there. Just very, very off there. But revenue, you can see revenue up 4.2%, and revenue growth year over year up 8.6%. So I think going forward, Walmart is still a very strong company. I'm still invested in Walmart within the Roth IRA, and will be continuing to invest more. If this company does fall further, I believe it's still positive in the portfolio, but I would really like to see this one fall. Target also missed. I don't shop at Target very often. It's right down the street, but I do not go there very often. I'll shop at either a Trader Joe's, a Kroger's, a Walmart. It really just depends where I am kind of at. I do work right across the street from a Walmart, so it's very convenient there. Home Depot also missed. So Home Depot and Lowe's were two areas that, with all these past few months, that individuals have had really to themselves in their homes. I've seen a lot of individuals going in and out of Home Depot and Lowe's, so I was kind of interested to kind of see how Home Depot and Lowe's both play out. Home Depot missed just slightly here. They came in at 208 per share. They had expected a 226, so that is a bit of a miss there by roughly 9.2%, but they did beat on their revenue. They came in at 28.3 billion, whereas they were expected around 27.2. So that's a beat there of 3.8%, and still year-over-year growth up 7.1%. So overall, Home Depot doing really well. Lowe's did beat, but they guided lower. So maybe they're starting to see a little bit slower traffic. Maybe they're just being a little bit, more not optimistic, but just being more in line with what could be expected here for the remainder of 2020 with what is currently going on. So they came in at 177 with expected of 129. That's nearly a 50-cent beat there on Lowe's there per share. So that's amazing. Also, they came in at 19.7 billion and 18.1 billion. I am a shareholder of Lowe's and will continue to buy Lowe's. I do not own Home Depot. I do prefer Lowe's, one of the smaller of the two. Oh, it is the smaller of the two. And we can see sort of their growth here. So earnings up 31.1%, their beat, and revenue up 8.5%. Revenue growth year over year up 10.9%. So really, really well there. Lowe's has a smaller market cap, so they definitely have more growth potential in comparison to Home Depot. NVIDIA here, they beat earnings. NVIDIA has been blowing up. I've seen this one covered in quite a bit of the dividend Facebook posts and some of the YouTube channels. NVIDIA is pretty quiet. You saw a lot of NVIDIA, I think, back in 2017, 2018, when Bitcoin was sort of crazed out. NVIDIA is crazy, going crazy. I have a NVIDIA card in my computer. I think everybody does. So they came in at 180. They had expected 168, so a nice beat there. If we scroll down here, we can see an earnings per share beat of 1.7%, revenue beat of 3%, earnings growth. Check out that earnings growth for their revenue or their earnings, 168.7%, and their revenue growth 38.7%. So that is just amazing there, and that is why they are having just so much growth there with their graphics cards. Palo Alto, this is one I haven't been too familiar with in the past. As we're moving away from Cisco where I work, we had a ton of Cisco products, from their Stealth Watch, their ICE, we use their AnyConnect to kind of VPN, and we use so many of their tools, and they just were not there on the level that we really needed to be at. So we did look at other vendors. HP, Aruba, and Palo Alto stood out. So we're moving over to Palo Alto firewalls, and we're moving over to Aruba as far as our networking gear. So I was kind of really looking forward to kind of seeing how this one kind of play out, as I do believe they're in a much better sort of area to begin competing against Cisco. So we can see here that they came in here at $1.17 per share versus they were expected at 0.93. So a lot of infrastructure beginning to kind of grow, businesses looking at protection, firewalls, and such. So I think this is a really nice kind of growth here. Earnings 19.4%, revenue up 5.1%, earnings growth 963%, and revenue growth 19.7%. I don't believe I own any at the moment, but it is something that I'm interested in as far as a growth play in my growth portfolio. Splunk, I don't use Splunk myself, but it is one of the log SIEM tools. It's a logging tool. We use Logarithm at my work. I kind of manage that one in order to kind of track what sort of activities being done on the network, so I can see what is being done across our network, what's being accessed, who's it being accessed by. And Splunk is just sort of also in that sort of niche where they just a log collector, and it sort of just reports up what is happening. This one I'm not too interested in at the as far as long term. This is just kind of an interesting one to see how their business has been doing, and really they didn't miss by much. 0.56 versus let's see here, 0.57 I believe. Yeah. Oh, they were expecting a loss of 0.56 per share. They actually came in at a loss of 0.57. So they had a smaller loss, but still a loss. So here, if we look at their earnings, down 3.7%. So really, they're not profitable. Their revenue down 2.6%. Earnings growth, they are growing year over year, but they're just not very profitable. So not one. I don't think I'm invested in it. I don't believe so. Intuit, TurboTax, TaxSlayer, one of the two. Let's see, QuickBooks. They are sort of owned by the Intuit brand. I am using QuickBooks for my personal businesses, for my real estate business, and my YouTube business. So I use those products. I also do my taxes on, I think it's TurboTax. So, crazy big business, a lot of products out there to be used, and this one came in at $4.49 per share with expected $4.31. So this is showing that it's not a beat. Maybe it's not a beat in comparison to their expectancy of this company at 0%, but their revenue did slide just a bit here, down 11.4%, and year-over-year growth is slightly down on their earnings and their revenue. So maybe individuals are using other products in order to do their taxes. There were a lot of we had the extension till the 15th of July 2020 in order to get taxes done. There's a lot more free products out there for individuals to use to get their taxes done, so that may have been something that they had used instead. So I thought this was kind of an interesting one. This gave me a chuckle this week, as my kid has just turned 5. He turned 5 on May the 4th, and he'd always ask, how much is $1 million? Is that enough to get you to quit working? As $1 million is great, but he's like, it would be nice to just have infinity dollars. So I thought this was just funny. 5-year-old, I wish I had infinity dollars to give to people, and I think that would wreck the economy. And the Federal Reserve is over there just printing off money off the charts. They have the endless infinity amount going on right now. So I thought that was a funny little meme. And the market, I have no idea why we are so bullish, why we are so crazy. This was posted on the 18th, so this is Monday. And on Monday, we are up a whopping 4.57%. I don't know where I ended up at this week. I'll have to take a look at it in my Monday's video, so stay tuned if you guys are interested on the weekly performance of the portfolio. On Mondays, I cover the weekly performance. I also go into what stocks I'm buying and the dividends that were paid out for the prior week, and kind of reinvest in that dollar cost average into the portfolio. But I thought that was just crazy. We have the Fed pushing just cash out the chain, companies lowering their guidance, they're missing guidance, they're just kind of losing earnings and revenue per year, year over year. Companies are beginning to cut a lot more dividends. We have Hertz that just filed for bankruptcy. I believe the unemployment number is now around 38 or so million. The Fed's out there buying bonds and ETFs that they're not really supposed to be doing, and the list just continues to go on. So the Fed's out there becoming the most powerful, they are the most powerful being or entity in the world there. So 2 stock buys this week. I did purchase Walgreens and 3M. These 2 purchases increased my future dividend income by $4.74. These are very strong companies. I don't have any issues with them potentially cutting their dividend. So these dividends are safe in my opinion for myself. And going forward, they'll pay out $4.74. Plus, I already own quite a bit of share of these. So this would just come up. Walgreens just went ex-dividend on Tuesday of the 19th of May. And 3M will come up on ex-dividend, I believe, towards the end of this month. So those are 2 that I'm looking forward to go ex-dividend. Now, jumping into the weekly performance of the indexes, we have the S&P 500 up a whopping 3.2% here. Very nice performance overall. Really not a negative out there, not a lot of negative. You can see on Tuesday there was a bit of a quick sell-off here towards the end of the day, but if you were selling, you panicked. You're like, oh my god, I gotta get out of this market. There comes the sell-off right there, and you panic sold right here. I know a lot of investors that were back during this downturn. They sold. I saw in the Facebook groups. They posted in the Facebook groups. They were posting on YouTube. They were making videos of selling out of their accounts. They were down 20, 30%. Like, I can't handle it. They sold out of their positions. Here we are, S&P 500. We're about to break the 3,000 point once again. That's just crazy to see the performance here and the current situation that we are currently in, with small and mid-cap businesses just beginning to reopen, very tiny, in my local area. I don't see a lot of the smaller businesses reopening. I do see a few out there are beginning to reopen, but really there's not a lot that are just kind of reopening. The crowd, the business for them, it just isn't the same as it was prior. So I don't know how it'll kind of affect them here. Dow Jones up 3.29%. So just slightly beating the S&P. The NASDAQ up 3.44%. This one's in second place. So guess who came in first this week? The Russell 2000. So outperformed week after week. I believe it beat last week as well. I think they were up last week, right? Let's go back. I got this right here. It is right here. Russell. Oh, no, they went down to negative 5.46. So they still had a big number last week, but here they're coming back. So they definitely need this to come back. You can see here year to date they're down 18.76% still, whereas the Nasdaq is up 3.92. The Dow Jones is still down 14.27, and the S&P is down 8.52%. Now, stock futures, not a whole lot is going to show up here until we get into Sunday night, where we see the Hong Kong market open, the England market open, the German market open. These world markets will kind of be open. We'll see stock futures either be up or down some percentages there, and that's usually a good indicator of how Monday morning will be for me. Now, as far as the week performance go, let's take a look here. Walmart, as I said, I knew they were down roughly 1 to 2%. So Walmart is down 1.28% this week. Procter & Gamble down 1.75. There's a lot of cash moving out of the consumer defensive companies. You can see Walmart, Procter & Gamble, Target, Dollar General, all sort of negative in the week. Clorox Company, this is one I sold out of a bit ago at $160. Now check out that price. It was either $160 or $170. An accident, I sold out of them like a goofball, and now it's $198. So it's crazy. Now, looking at this, you can see what sector was pretty weak this week. Healthcare, right splat in the middle. Healthcare got, a lot of red there. Johnson & Johnson down 4.04, Pfizer down 0.69, Merck down 4.27, Eli Lilly, Amgen, Bristol Myers, Clean Sciences. Kind of interesting to kind of see all of these here down negative. The one positive one here that I'm invested in here is AbbVie. Now, I'm considering taking profits on AbbVie. I was thinking about it last week, but we just had such a big rally this week with the reopening of the economy, and seeing how that all kind of played out, that AbbVie is now over $92. So this is where it was kind of hitting some resistance that last time. So I think I'll probably just sell a small portion of it. I'm not going to be completely selling out of it, but I do believe that here in the short term, anything over, say, $92 to $95 is pretty high for AbbVie, and it is acting as a ceiling and having resistance. So I'll probably just sell a portion of it, and if it does come back down into the 80s, I'll have no issue with just buying more of it. McDonald's this week up 6.10%, Starbucks up 4.67%, Nike, just so much green, so much bright green out there. So here within the restaurants, a lot of bright green. Industrials, real estate investment trusts, check out those. Utilities, there's a lot of green out there. Even financials this week, JP Morgan, 4.16%, Bank of America, 5.69%. So I did post a screenshot of this on my Facebook page. If you guys are interested on the weekly performance, I'm going to go ahead and track that every single week. I'll go ahead and post a screenshot of the weekly change, as well as what we're currently covering as far as the index changes for the week. Now, as far as oil, whopping 5-day change here, 14.25%. It is still down here today, a whopping 75.04%. So this is a small 14.25. This is the whopping negative 75.04. The dollar, a bit trending sideways here. It started the week here about $100.38. It is now at $99.80. Not a big change there for the dollar. Silver moving higher, up 3.22%. Last week it put on 7.55%. Gold, silver and gold. Silver being the most underrated one, down in that $12 range, and now it's here up over $16. I believe there's going to be some resistance here in the short term for silver. Once it hits the $16, $17, it does usually have a bit of a downtrend after, it might trend here for a while in that $16, $17 range, but more than likely it won't go any further than this. We won't see, it won't go $18, $19, $30 for silver. It'll probably retract with, some way or another. 5-day change down 0.43%. Year to date still up 14.22%. So gold, kind of weird. The market's up positive. The dollar is a little bit lower, but gold is also lower. So down 0.43% on the week. Bonds this week up 0.33%. So interesting there. The 10-year rate. Now, last week here, this is what I like to do here from now on, kind of going forward. The 10-year rate is moving slightly higher from 0.64 last week to now 0.66. So we are seeing that 10-year beginning to kind of move up just slightly, and the mortgage rates remain unchanged from 1 week ago. 1 week ago, we were at 3.56. and currently we are still at 3.56%. So that is the weekly change this week. Let me know in the comment section below, what do you think of the stock market this week? Again, I posted all of this information that we kind of covered in today's video. As far as the weekly change, I posted that over on my Facebook page if you're interested in checking the Financial Investor 101 over on Facebook. I do have links down in the description and the comment section below. And I would like you guys to know, if you can give your portfolio sort of a title, what's the title of your portfolio right now? Mine's sort of happy and confused, because while I am positive, a lot of the companies I don't believe are doing their best at the moment. So it's still green, but just not doing. they're happy and confused. So that's the title of my portfolio. If you could give your portfolio a title, what would you give it? Let me know in the comment section below. And of course, that is going to be wrapping up today's video. If you guys are brand new to my channel, definitely hit that subscribe button below. I cover the stock market, dividends, weekly recaps of the market. If you guys did enjoy this video, find it helpful, entertaining, and all that fun jazz, definitely give this video a thumbs up. And if you have any comments at all going over the stock market, dividends, this video, or just anything in general that you'd like to see covered in an upcoming video, drop it into the comment section below. I do read and reply to all your comments, so of course leave me a comment regardless of what it is, and I will reply back to you with something fun. So that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.